watching this. I think to start off with, just in terms of the framing of this debate, I think I'll start my first question to you, Mr. Cherian, and the whole debate around cryptocurrency. What do you think anything's missing?
I think certainly lots of things are missing, but I'm going to highlight just two to start with. I think what is that the consciousness or the awareness that crypto evolved and has now become seen as a kind of harbinger of those who are not happy to be confined by the nanny state. So that's something that we need to take into account. There is, of course, the fear that people may misuse it, the deep, dark threat of terrorism and all of that. But what is missed out in much of the debate is that the evolution of crypto and its narrative today, and you spoke about narratives, is about people who want to, in some senses, steer clear of the nanny state. And the second thing, I think, is the lack of recognition that the entire crypto space could be a place where all kinds of new entrepreneurship could be incubated and flourish. And the particular opportunity that happens to be available to India is being able to use this technology in the kind of economy that India is. And I think this is very crucial. People don't recognize that India has a very, very special opportunity because the nature of the Indian economy, the nature of monetary flows and ebbs in this economy are different from what happens in a lot of developed economies. So I think that there is room for entrepreneurs to create products, services, all kinds of things in the space that we need to bring into the narrative. I'll stop here because we have far more erudite people to speak.
Thank you, sir. But that, I think, frames the debate very eloquently. And I think, Dr. Arner, I would also ask you about narratives, since you have seen them globally. You've seen the whole narrative on cryptocurrency evolving globally from when it was seen more as a menace to, what it is seen as now, and how the evolution of dialogues has happened on CBDCs as well. So could you throw some light on how has the policy thought process globally evolved on cryptocurrency, let's say over the last 7, 8 years?
Thanks for that. And I think Dilip is exactly right. I think if we're going to highlight two different things, I think one is this idea of technology and using it to build better infrastructures, better systems, in particular, better monetary and payment systems. And this is something where India has already been doing a great deal of work, but this is in many ways next stage technology. And this, I think, is something that we're seeing all over the world. You see the original moves as sort of challenges, but then you see increasingly the adoption and use of cryptocurrencies by governments and states. But the second, and this I think is really important, is the idea that when we are talking about blockchain and about transactions, ecosystems, environments, core to making these work are trustworthy monetary instruments that can be embedded in transaction structures. And there's a very important role in making sure that one has a robust, trustworthy, efficient, safe, effective monetary instrument to embed in blockchain transactions, because the structures have, as Dilip says, huge potential for innovation, development, and making many other things, from security settlement to supply chains to proof of origin, much more effective.
Great, and I think there's a lot to unpack there. And I think coming to the monetary questions, we could not have a better expert in house. And I think Dr. Goyal, I think this is a question that I think a lot of people in this space would like to understand. How is currency really managed, and what is it about cryptocurrency that is so dangerous to the conduct of monetary policy?
Crypto has, as Dr. Arner was saying, many sort of technological advantages in innovation. But to call it a cryptocurrency is a misnomer, because currencies are normally backed by sovereigns. Now, this is no sovereign backing. I think Dilip was telling us that it's a fight for freedom. But unfortunately, if you look at history, most of this free banking and non-backed currencies have ended in collapse and tears. None has survived. And it creates a lot of dangers for the unwary investor who comes in. Now, to call it a currency is a misnomer, because suppose you're going to buy a cup of coffee and you need to pay with cryptos. By the time you finish the crypto, the amount you'll have to pay will have changed. It's so volatile. So therefore, the function of, as a medium of exchange, it is very, very unstable. And although there are variants being developed, stable coins and so on, but their backing is uncertain. Then if you want to use it as a unit of account, again, it's so volatile. Store of value, again. So it's primarily coming in because, doing so well, because people are buying that asset. They believe other people will buy it, and its supply is somewhat limited, at least the original Bitcoin, and its value will go up. So it is a speculative asset in that sense. And if it collapses tomorrow or it loses value, you have these sort of tulip mania we know in history, where people just come in and then it collapsed at some stage and left. So people need to be, that is why regulation is really needed here to clarify what is a crypto. It's not a currency, what it can be used for, and where, the financial stability aspects, monetary stability, there's a large shift towards cryptos from the traditional domestic currency, then it really affects monetary policy adversely, can create instability, affect the exchange rate. One of its advantages is the ease of cross-border transactions and low cost. But if there's a sudden flight from the currency, that can again create a lot of instability. So you need, and if it is an asset, it needs to be taxed like other assets. It needs to be investor protection and so on. So there are a lot of very interesting regulatory issues. How you clarify that it's not money, it's not currency, it's something else. And what are the kind of regulatory issues? I think your report has sort of brought out some of these. Thank you.
Thank you, ma'am. And I think the other aspect on this whole debate is, of course, the one on national strategy, national security, how you sort of treat how do you treat your innovation ecosystem vis-a-vis what other countries are doing. I think that's a very big undercurrent in all the thinking around policy. So on that, Mr. Chaudhary, it would be great to understand from your perspective, how do you think countries should think about cryptocurrency in terms of national strategy, or how are they thinking about it currently, even in India?
Thank you. Yeah, I think it's pretty well known that one of the reasons that India reversed, or the government supported the decision to reverse the RBI's original ban on crypto, was not only the Supreme Court decision, but because the national security apparatus in India came in and said, look, China is launching a digital renminbi. Something here is going on that we need to be part of. And I think what the nature of crypto currencies, what we're looking at internationally is one, as others have mentioned, that some of it is going to be difficult to trace. But the point is, there is already massive offshore trading in crypto from by Indian investors. and there's very little the Indian government can do about it. So if you decide to ban or over-regulate crypto in India, you're going to see a lot of that money still being transferred overseas to places where you cannot regulate or monitor. So it's better if you wish to have it inside the tent rather than outside. Second, if you can focus on blockchain or encourage blockchain-based crypto, you at least get a transaction line so you can tell where it's going or where it came from. And it's much easier to work out if it's going to be used by a terrorist or used for gambling or something else like that, or where it's going at least. The other point is that other governments are already working on it. So if you look at what the Bank of International Settlements, the so-called Model 3 group that's working on a cross-border digital currency structure in which UAE and various other countries will essentially acknowledge each other's central bank digital currencies. You can already see what's going to happen on remittances, for example. The UAE is a huge source of remittances around the world, and definitely for India. So we have to be, again, part of that story if we are going to be able to understand what's going on there and also figure out what type of capital, where is it going and why is it going to where. So for a whole set of international reasons, we cannot afford to not be part of the game. It's going to be difficult. The tulip bubble was mentioned. The dot-com bubble, I think, is even a better example of where money just poured into companies that didn't make any sense. But the net result was a new technology, a new set of technologies in the ecosystem that was relatively stable and which governments learned how to handle. And that's what we're going to have, that's the passage we're going to have to go through. So far from anything avoiding crypto, the government has to work even more, not only within its own internal agencies about how to handle this, but it has to work with other governments and how to work with this. And I think you saw this morning, Prime Minister Modi announced that besides avoiding any talk about banning crypto, he just says that democracies of the world have to work together to monitor this and see that it doesn't cause problems. And I have a suspicion that I would put a side bet that in the next 2 or 3 Quad summits, we're going to see crypto as part of the agenda.
Yes, and I think it's amazing that at our event, we have 2 of the largest democracies also presenting on their regulatory approaches. So just in about an hour, we'll be hearing from the former Undersecretary of the US Treasury who managed all oversight over financial crime, the FinCEN, the OFAC, the FATF. And we'll also be hearing from Japan's FSA, the director there who's been integral to all their work on managing ICOs, exchanges, exchange hacks, self-regulatory organizations, and a lot of these concepts that have been coming up in the Indian debate. So I think now I would like to possibly dive a little deeper on particular buckets of issues. So if we take the one that has come foremost in India, which is the issue of investor protection. Investor protection and a whole host of market risks around it. Who are the players? What are they selling to people? How are they managing that? And I think there, Dr. Arner, you are the expert on these issues. Can you tell us about certain models that are being recognized globally to sort of tackle trading, tackle investor protection, tackle the regulation of exchanges? Any light you can throw on that?
Yeah, I think what we're seeing is a recognition that some of the real challenges are around fraud, manipulation, failure, these sorts of aspects. And these actually are very long-term focuses of financial regulation, of consumer protection regulation. And as a result, particularly to the extent that you are talking about something that has an investment element. And of course, you're differentiating between different things depending upon their nature and function. but some instruments are very much investment products. They're meant to be investments. And I think increasingly the view is that as a result, one needs a regulatory framework that treats them in the same way as other regulatory frameworks. Often where you start is in the areas where we see the greatest risks. And the greatest risks that we tend to see tend to be where concentrated trading activities take place, and that's the exchanges. And so we've seen an effort through a number of international organizations to build frameworks to bring exchanges into the regulated environment. And it has to be said that many exchanges are moving in this direction for the simple reason that it's in their self-interest, that if an exchange is regulated, that enhances its trustworthiness from the standpoint of consumers and users, which is in turn beneficial from the standpoint of its business. So we're often focusing on exchanges because of the key role they're playing. And we're also often looking at things like cybersecurity and custody. You know, if you think about some of your biggest risks, if you have an exchange that collapses, what actually happens to assets of users of that exchange? And of course, we have had a number of circumstances where the protections around those assets was quite poor, or where the assets have disappeared, been stolen, et cetera. And so we have the opening areas from an investor protection standpoint tend to focus on the exchanges. And I think increasingly on disclosure, we're developing accounting frameworks, we're developing transparency frameworks, and on this idea of custody and making sure that the assets that an individual or customer thinks that they own or control are actually there.
Wonderful. And I think a lot of these are, at least some of these are key concepts, even when it comes to the solution we'll be discussing here. I think one aspect that maybe is fairly unique to the Indian debate is something that we hear a lot today is about the misleading of youth and, any kind of false claims or, any kind of messaging which is unethical or deemed inappropriate, with regards to these assets. So any views here from the panel on this issue? What do you think is fueling this issue? I mean, why are so many people jumping in, even though the state has not given a green signal? What do you think is actually missing? Why is this happening in our country? Yeah, Mr. Cherian, you had some comment. You're mute. Okay.
Okay. Yeah. Okay, I'll try and take a shot at it. I think the reason why there's excitement about it is a bit like what is happening unnoticed by many is the concept of growing day trading in stocks. We have a very large number of people, especially young people, who are technologically savvy and who have probably less hours of employment, if any. And I think that they think it's a shortcut to short-term riches. I think Ms. Goyal mentioned the fact that there could be the danger that you would have a whole bunch of people charging into this area and then being deeply disappointed at the least and horribly duped at the worst. There's that problem. And that is a problem. And unless it is backed by some reality, in the case of day trading, there are real stocks and there is a SEBI and there is a exchange which is controlled by very stringent regulations, which make sure that even if there are losses, they are contained within a day. I think that is probably, I would say, one of the reasons why there is excitement in this. And the second is clearly the fact that because it is at the cutting edge of a new reality, the the new metaverse, as it were, those who don't want to be left behind feel that if you enter on the ground floor, the chances are that you might be able to exit with a neat package. As Ms. Goyal said, the chances are that people are chasing a chimera. But hey, that's the nature of the kind of people who are involved in this. Now, does the nanny state need to protect them? That's a question we all need to consider. I'll stop here.
Okay. And I think coming to this aspect of what are people investing in what appears to be a chimera, right? It doesn't seem to be solid, right? And here as well, also like to ask you, Dr. Goyal, how is this sort of fitting into the monetary policy thinking in India? Because we know there's a lot of instability ever since COVID started. There's been just so much that all countries have had to deal with economically. And there are so many priorities which have taken precedence over this. And I think quietly over the last 2 years, it has grown very rapidly when maybe a lot of people were not looking, right? So could you help us understand what have been the larger priorities of India monetarily? And why is it that this issue was maybe not considered very actively right now? What is it that is important for the Indian state right now, and which takes precedence over all these matters?
I think Dilip was right that this has really grown because there's so many, lockdown and people sitting at home with computing facilities, something new happening they can participate in. That is one reason it has grown so much in India, I think, in the last 2 years. But internationally also, this really boomed after the GFC and the sort of debasement of currencies, where people felt that currencies are going to lose value, then cryptos might be safe. It's like people move to gold whenever there's high inflation. But at least gold is held by central banks and it's a well-regulated kind of market. Here, there's absolutely no intrinsic value, maybe apart from the technology and freedom, if you want to say that. So I think for monetary policy, it is a sort of competition in a sense. It's another currency that, and if there is a flight from domestic currency to this, I think the IMF has also warned it can create a lot of instability. And this is worldwide, because we are seeing that some countries which have very already dollarization, nobody wants to hold their currency, have adopted crypto as their national currency. So, I think in that sense, it makes policymakers pull up their socks and make sure that their currencies are doing well, inflation is controlled, etc. But otherwise, the advantage of cryptos is this ease of cross-border movement. And this whole thing about a central bank digital currency. And India, again, has an advantage here that with the UPI that we have developed and the whole, innovations in the digital space, we are well, on the way to this. So that is one aspect. And so I think that on the whole, we are well set to as a country to have some substitute for cryptos, but they will continue to be attractive as an asset. The other thing is the transparency, I think, in regulation, and we still have capital controls. Therefore, if this can lead to a lot of transactions which are not consistent with our rules, and their regulation must come in, and because cryptos can be very transparent if they are well regulated. If they are banned, it becomes a black hole, as I think Mr. Chaudhary was saying. So that is why you need good regulation. You can trace what is happening, and there are warnings, as well as for the limited purpose that it is safe for investors who know what the risks are and who want to get into it, not young people who are just doing it because it's a fashion or they have spare time. They can do it safely. There's investor protection also. And you have regulations to prevent a violation of domestic rules, kind of capital controls we have, etc.
Yes, ma'am. And I think we're looking forward to the discussion on a solution where we're actually covering a lot of this and looking at an innovative way for India to do it. But also, ma'am, just one more aspect which I did want to ask you about, and there were some questions about, is on inflation itself, right? Since that has become notionally a sort of driver for people to move into assets like this. What is your outlook on inflation? Like we've been seeing reports from the US, and now it was expected to be transitory, but now inflation is here. Could you throw some light on this?
I think we need to dissociate Indian inflation from US inflation. So in the US, because there's been a huge fiscal stimulus and very rapid recovery, so that the output gap has shrunk, and there are more vacancies than there are people, there to fill them. People are resigning en masse for some reason. They don't want to work. They have found new values. So all that makes for inflation to be somewhat more persistent than was expected. Because initial research did show that most of the inflation was in, say, oil or commodities that were affected by container shortage, the sort of snags that we saw in trade. So, but overall, I think the one big point to remember is that most countries, including are in some kind of an inflation targeting framework. The central banks are bound to respond if inflation exceeds their comfort zone. In a way, the US was working towards inflation exceeding its tolerance band because it had been below for so long, so to average it out. So they have accepted a rise in inflation, but they will react if it is sustained or looks persistent. So I do not think inflation is going to be persistent like in the 70s. Even for oil, there is when we go beyond the winter, we will see, because the shortages have led to a kind of, where markets are building in and therefore raising prices, etc. So we might see, most futures show that oil prices should fall over the next year. So I don't think this inflation, and in India, food prices have always been a major cause of inflation. But we are seeing a lot of action there. Food inflation has been somewhat contained. The sticky inflation we are seeing in core is where global factors come in, such as oil prices and so on. But we're seeing a tremendous increase in energy efficiency, so that we can absorb a higher oil prices without it necessarily being inflationary. Recently, we've had this cut in taxes. So if there is two-way movement, then it is a transitory thing which you can look through. The oil price inflation need not affect core inflation, and therefore inflation persists. But the one point is people should remember, in inflation targeting regime, there's no way inflation can become persistent.
Yes. Great. And I think also in terms of that threw a lot of light in terms of how, in Indian policy, we are thinking about these issues economically. And I think from a strategic perspective, I would also ask Mr. Chaudhary, how are Indian policymakers thinking about the tech race or cyber security? What are major Indian initiatives there where you feel, crypto somewhere might feature in the thought process?
I think is what Mr. Cherian had said earlier, and the others had said, that we have built this enormous digital financial infrastructure, whether it's the UPI and various other things. So the next step, obviously, is going to be the crypto side of it. But my sense is that policymakers accept that that's where they're going to have to go. Sorry, but they don't know exactly how to handle this. Because at the core of a lot of this is the fact that crypto eradicates a lot of the financial intermediates. And for example, things like terrorism finance is handled by going after the intermediates. That's where you're disciplined. FATF had to release a report recently trying to see how they could balance this. And they did say, actually, no, you can monitor crypto if you fulfill certain obligations, as Dr. Goyal and others have mentioned. If you have distributed ledgers and so on and so forth running most of this. So therefore, it's feasible to do this even though you lose a lot of the intermediates. That loss of intermediation, I think more than anything, terrifies regulators, because it's not just in something like terrorism finance. The entire banking system is built around that commercial banks are the intermediates of the banking structure. So you could, in theory, the fear of bank runs and so on, because people then will come to believe at least that they have a personal account directly with the Central Bank of India if they happen to buy central bank digital currency. But then the role of the commercial bank in the middle of a crisis then becomes irrelevant. And then what happens to those banks? So a lot of the regulatory system that we have developed is built on the intermediates, and a lot of that is now going to slowly disappear, whether it's cross-border or domestic. So there's a recognition that this is happening, but there's no clear idea how exactly you're going to do this. And you can see why the RBI is so nervous, because the RBI looks at this and says, oh my God, a lot of our regulatory apparatus becomes completely irrelevant here. And rightly, they become very nervous, but the answer is not to ban. The answer is to change and try to figure out how to do this in a manner that causes the least amount of disruption.
Oh, that was very well said. The answer is to change. So on that theme, any final thoughts from the panel? If we have to change, and the state has to change, and I think Policy 4.0 is also based on that premise that the policy apparatus has to change because we are faced with a very new reality. Any thoughts on what is this change? What is India's place in this change? What is the Indian opportunity in this change? What's the opportunity for the Indian state? Any thoughts from the panel?
I think a couple of different things. The first is the idea that this is at the technology frontier. And so there are opportunities to continue in a direction that India is already going. The second reflects also a longer term strategy, which is looking at how one can build enabling infrastructure that will maximize the participation in the digital economy and therefore maximize benefits across the country, as well as supporting innovation. I think the point is very well made that when we are talking about innovation, it's very rarely directed innovation. Innovation tends to happen when you put in place the elements that allow it to happen. But if you actually try to direct innovation to happen and control it, it very rarely works. And so I think that is often the challenge for policymakers, a desire to be able to control direction, but a reality that often innovation develops best when you build the environment and let it happen.
Yeah, if I can come in here, very excellent points. I just wanted to add to that. This issue that banks are worried that they will be disintermediated and policymakers are worried about that. It is true to some extent, I agree, but this is what happens with innovation. The people immediately affected are frightened, but an innovation creates new opportunities. For CBDC, for example, we know that the central bank is not going to be, want to deal with each household, and there is a distribution mechanism through banks. I think China, for example, they are experimenting with different tiers of the currency and where there is direct interaction with the central bank, where it goes through commercial banks. So as Professor Arner was saying, it is really creating opportunities for more and more participants that increases the backing and the acceptability of an innovation. And I think that is very much possible. And again, India has the advantage of building on all that we have done in UPI, which is really, and the digital stack, etc., which, for example, in tracing, KYC, in reducing transaction costs for customers and keeping track of what is happening. We have, it's frightening for regulators, but I think we are well set among countries to be able to do this, that it's feasible to build on this that has gone before. Yeah, thank you.
If I may just add one sentence. Go ahead, Pramit, after you. Please go ahead.
Okay, so I'm just going to say that one of the, when we talk about crypto, we're looking at an entire spectrum of different types of technologies. You have at one end stuff that is not built around a distributed ledger, so it's untraceable, it's chaotic, the value goes up and down and has almost no tangible value. You then have something like Bitcoin, which at least is traceable, even if it's volatile. Now you're going to have stable coins. So Facebook will be launching, what is it called? DM, I believe it's been renamed. And I presume other companies will follow suit and so on. And then you, of course, have the central bank digital currencies, which will be, really almost replicas of the existing fiat currencies. So you have a whole set of them right now. Now, what's interesting is you've seen China already move and say, we're banning everything except the central bank digital currency, because they're a control freak state, and that's what you would expect them to do. But the point is that India hasn't gone that far, and if we don't go that far, that at least in a portion of that spectrum which China has moved against, we still then have an have an advantage because the rest of the world is not going to necessarily go down that Chinese path. And as Dilip was mentioning, you're going to have a lot of entrepreneurship built around some of what we see there in the stablecoin area and so on. And India, because it already has an ecosystem, a digital financial structure, can become a major player in that field. So you have to see an opportunity here that actually give us an advantage perhaps over China.
That's it. And I think the final word, Mr. Cherian, what is the India opportunity?
In one word, it's huge. As Professor Arner said, you cannot direct innovation. You can only create an enabling atmosphere. And I think all of us have echoed that. How much freedom that will have? How much space are you going to give it? These are issues for governments in some senses to try and figure out. But the one thought I have is that much like the entire country is agitating that there should be more women in parliament, for example, I think in policy making of this kind, it may be good to add a few very young minds who are working in this space into the policy making area, along with others with more experience. Because I think that we are on the edge of a new kind of system. Some of it we need to have regulated, some of it we need to allow to just be an enabling environment. And I think a combination of the two will be potentially extremely powerful force for India to unleash, given that we have the world's youngest population.
Wonderful. And I think on that,